Hi, this is Dustin with Dustin's Dollars. Today, I'm going to be talking about Tellurian getting acquired by Woodside. If you can hear me, please let me know in the chat. I think there are at least a couple folks. I had a little bit of technical difficulties getting this one started and last time, so let me know if you can hear me and the audio is okay. Really appreciate that. So, this is what I'm going to be talking about today. This, I've been asked about this a couple of times, so I want to go ahead and make a video. I was not around last weekend, or else I would have done it right on the day. So sorry about that. I know that I'm a week late. This is not new news. This is old news. But I was asked a couple of times throughout this week of people who just weren't quite sure about the details. And so I wanted to go ahead and try to answer those questions for y'all. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I do still hold a long position in Tellurian, so this video should be for your entertainment purposes only because I could be wrong about everything they say in this video, and you need to do your own research before making any investment decisions. Okay, so, the headline here is, what you saw in the press release. Hopefully, Tellurian is going to be acquired, and specifically as a shareholder, they were going to purchase the shares of Tellurian, the shares that you hold if you're holding, common shares, as everybody is, and ticker TELL, for $1 per share. And I will also say, sort of as a side note, I believe if you're holding the baby bonds, the TELZ ticker, those will get paid out at par value at I think $25 per share. So just as a side note, because I know some folks did buy those, but for the most part, I'm going to be talking about the Tellurian common stock in this video. And so, again, you are going to be getting $1 per share if and when this transaction closes. So the details here are, there's not a whole lot more other than that they expect it to close by the end of this year and in Q4 of 2024. They do reiterate those dates and some of the more detailed filings if you read them there. Just overall general sentiment here. I have been long Tellurian for quite a while. I don't think this reflects the full value of Driftwood. However, management so far has really demonstrated they just haven't been able to unlock that value. Tellurian, we've limped along in hindsight, I say we've limped along for many years and just haven't gotten over the finish line of even the very first phase of Driftwood, despite some pretty amazing, events to give them tailwinds. And so, I, as a tiny retail shareholder, have just accepted there's nothing that I can do to ever, capture the upside that I thought, the full Driftwood facility could really bring to, to the company. And that, this is what we have to deal with right now, if you're still holding your Tellurian stock. And, Martin also published the shareholder letter. And this shareholder letter was basically meant to try to convince all the shareholders that this is a good idea and you should vote for it. They did give some additional rationale as to why, the board thought that this was the best thing. And really the only thing that they said in here was, this is a transaction we can do right now. And, timing and speed, like they say here. And hey, it's going to take us a long time to get everything lined up and actually get us to FID on Driftwood. So, sorry, I saw the question, is TELZ done too? Yes, I think those I believe will all get bought out at when the if and when the transaction to actually purchase Tellurian closes. I believe, again, don't quote me on this. I have not spent as much time looking at the details for the TELZ, but I'm pretty sure those are going to get paid out at the par value, which I believe, as I said, is $25. If you look at TELZ, I think it's probably jumped up, similar to how Tellurian jumped up, somewhere close to $1. TELZ probably jumped up pretty close to, I believe, $25. Yeah, so it's at $24, and I guess if I would look at the chart there, right before the acquisition, yeah, they were trading pretty low because, Tellurian was having some balance sheet issues, and there were some legitimate questions of the solvency in the long term, the solvency between now and I think these are 2028 bonds, so there were some major risks, and, overnight that jumped up and pretty quickly started trading close to that par value of $25. So I believe if you are holding TELZ, if and when this transaction closes, that you'll be paid out $25 for each share of TELZ that you hold. So hopefully that answers your question. Yeah, exactly. Transient Stacker says TELZ went up because now it's more likely they will get paid. I mean, yes. So it's basically, will this transaction close or not? and seems pretty. I haven't done a lot of looking into Woodside. I'm going to be honest. I haven't had the time recently, but I mean, I know about them in passing, but I haven't dug into them in any real detail. So I have to assume that it's credible that they're going to have the financing and be able to just, be able to acquire Driftwood or be able to acquire Tellurian, I mean, for the prices that they talked about on here. So that is pretty credible. And so I personally think is likely that the deal will go through. I'm going to go through in a minute, what do they need to do to get this to close. But real quick, more fundamentally, if you're still holding the stock, just so it's, incredibly obvious to folks, because I've gotten folks from, I don't know, at least 5 people who weren't quite sure what this means. When this transaction closes, the shares of Tellurian that you have in your brokerage account will go away, and instead you will get paid out $1 for each share that you were holding when the transaction closes. I don't personally know if there are separate tax implications for getting paid out that $1 versus if you sold the stock for $1 per share. I'm not a tax professional, so I really don't know. Not even gonna guess on that. But you can still hold your shares, and I think I saw the question: can you still buy Tell under $1 and hold for a guaranteed $1 payout? So first of all, I will say it is not guaranteed. There are still risks. But if the transaction closes, you will be getting your $1 per share, right? So again, it's the risks of what might happen to cause this transaction not close, which I will go through in a minute. But I am going to speak to exactly your question here. Let's assume the transaction does go through. What happens, right? You do get that $1. And so, yes, you can go out right now and buy Tellurian shares, as of Friday. If I go back to Tellurian here, the one-day chart here might be a little small, but, as of Friday, it was trading for 94 cents, and then it had this massive sort of spike down to 86 cents. Who knows why, right? There was rampant speculation. Every chat group that I'm in, or folks that talked to me about Tellurian were within minutes. We're asking, did the deal fall through? What happened? Because that's a massive drop for basically what is, as you sort of called it, a guaranteed $1 payout. And it's not guaranteed, but it's a, let's say, fairly low risk payout within 6 months. And even still, it closed at 92 cents. But the answer is yes, you can go buy these and then hold them. And if the transaction closes, you will get your $1. And I actually put together a small spreadsheet here. I can maybe make this a little bit larger to show you, what would your ROI be if we annualized it? Again, this is not the ROI you're getting on your money because you're only holding it for 6 months, or actually more like 5 months. But if you annualized it, this was starting as of tomorrow. So this is if you purchased on July 29th, which is tomorrow. What would your ROI be on an annualized basis for those shares, depending on your various, what you can purchase it for? And so if tomorrow, let's say it opens up and it's still trading for 92 cents, you buy it at 92 cents, and if you hold, and if on December 31st of 2024, you get paid out $1, right, you're making 8 cents on 92 cents. And so if I do the math real quick on that, let me bring up the I guess I can just use the Google for the calculator here. So if I do 0.08 divided by 0.92, your actual, just a raw ROI is going to be 8.7% on your money, but you're doing that in roughly 5 months rather than 12 months. So annualized, if I did my formula correctly, that would give you a 21.7% return. And so this is, one reason as to why some people might be doing that. And this is actually a thing that a lot of firms do. This is one thing that hedge funds will do. And I mean, Warren Buffett has famously done this in various times. He did this for, I think it was the Activision, if I recall correctly, got acquired by Microsoft, or was getting acquired by Microsoft. It's been a year or two. But I think, if I recall correctly, he bought a whole bunch of Activision stock. And, after the announcement of the acquisition came out, and because it was still trading, and he said, look, I can get a guaranteed, 15% on my money, assuming that the deal goes through. And there's basically no other risk, right? The only risk is that the deal doesn't go through, because in that situation, the acquirer was Microsoft. And so of course, Microsoft has the money to do it. And so really was just, will the acquisition go through, the regulations and the votes of the shareholders. But that is a strategy that hedge funds and money managers will actually use, is they will buy these stocks at 92 cents and just sit on their hands and wait for it to get paid out $1 per share. And so you can do the same thing if you want. So if we talk about that, what are the risks of not getting your dollar? And that is really detailed here. If you read through in the 8K that talks about the details here of the agreement, there's a couple different things that need to happen, right? These are the closing conditions. Number one is the Tellurian shareholders have to actually approve it. And so I think I saw some filings, the proxy statements, or that they're going to file proxy statements. I don't remember, but there's going to be a vote, right? In the same way that they have annual votes for the, new directors on the board, there will be a vote for, do you approve this merger or not, for all the holders of the stock as of a certain date. And so that is a risk, right? The vote could be a no. It could end up being people say, no, we do not want to sell for $1 per share. We think that it is actually worth more than that. In my opinion, I'll talk about this, I think I think the vote is likely to pass. The reason why I think the vote is likely to pass is because, Tellurian's ownership is generally dispersed, as far as I could tell, amongst quite a few retail shareholders. But then so I think there's a chunk of it that actually is in retail hands that, you can't really coordinate those folks very well. It's unlikely they're going to vote no, because most of them honestly don't vote on a lot of things. But then the biggest blocks that you have of the holders are, the Vanguard, BlackRock, Martin Houston, and then I guess Chatterjee as the other big name shareholder that we know of. And, Vanguard and BlackRock are probably going to look at this and say, the premium over the stock versus just, a week or two ago, this is, I think the figures was, I think it's a 75% premium over literally the prior day. And even over the prior month, it's like 48% premium over that. So they're going to be happy to take that money. They're going to think that is the best thing to do on behalf of their shareholders, right? People who own index funds. And, Chatterjee, I think, purchased most of their shares, if we go back, in December of 2023. So if you look here, I think it was probably somewhere in the 60-cent range, 70-cent range. And so for them, they're getting a pretty nice return. That's about, just off the top of my head, something like a 40% return, 30 to 40% return in a year. So I think as a hedge fund, they're probably pretty happy with that, to just take their money and then go on to whatever the next opportunity is. Again, it kind of depends on what their original motivation was. But if they just were looking to, make a trade, that is a pretty nice trade for them to get. And so I imagine they would vote yes. Martin Houston, I have to imagine, is going to vote yes, considering he's the one who, is putting this deal together, so to speak, and, is even writing the shareholder letter. This came from Martin himself to say, hey, I think this is the best thing we can do given the current situation. And so that seems pretty likely. And so I think that's likely to happen. So if we go through what are the other, conditions, basically the other one here, the number 2 for the conditions here is regulatory approval. And there's some specifics here of what that means. And you can read through it if you want, but just simplifying, regulators need to approve this, which is I don't know. You would say there's probably a small risk, right? Just because right now, with the current administration and the energy and, fossil fuels, it's always a wild card. But again, I guess I won't speculate on how high or low risk that is. Personally, for me, I am not worried about that. You, again, need to make your own decision on that one. But that's another thing that does need to happen. That's something that could actually derail the deal, right? Because I know they called out one in particular where they said there's a some sort of a, where is it at? I don't recall in here, a CFIUS, which I believe was something about, I had never heard of this myself. Again, I'm not a financial professional. It was the Committee on Foreign Investment in the United States, right? And so this is because Woodside is, I believe, an Australian company that would now be purchasing these, energy assets in the United States. And so that is one additional regulatory approval that they will have to get. But I have no idea how high or low risk that is. That might derail the deal. But again, I'm not personally worried about that. I have to imagine that both companies involved kind of thought that this was going to be okay. So those are the risks that you're going to have for this. Now, there's one other risk for this deal not going through that would actually be a positive for shareholders, and that would be if someone else came in with an even higher bid. Now, personally, I think that is unlikely. I know there's some folks out there, some retail shareholders who, who talk to me, who are holding out hope or are hoping for that to happen. I think that's unlikely, generally for two reasons. Number one of the conditions of this deal really is that Tellurian, they call it a no-shop restriction, that Tellurian cannot go out and solicit any alternative proposals right now. So they can't say, hey, Woodside's buying us out for, $900 million for, $1 per share. Can you do better? Can you give us, 120 per share, 150 per share, right? Tellurian cannot go solicit those. Now, again, anyone else who's looking at this can say, you know what? We'd really like to buy Driftwood, and we're willing to pay, a little more than Woodside, and they could send in an offer, but Tellurian cannot go out to anybody and actually solicit those offers. So that combined with the fact that, Tellurian has not been secretive about the fact that they are trying to sell the company, and they even hired, Lazard as their advisors here, and we don't really know, that all happened in behind closed doors. So we don't know how many discussions Lazard had and with who, but I have to imagine that they've already explored this pretty heavily and that they thought this was the best deal they were going to get, because otherwise they would have went for the other deal. So I personally don't think it's very likely. It is possible, but I don't think it's very likely that we're going to have, an even higher bid come in from someone else. If it happens, that would be a very, very, very happy surprise for the shareholders. But I'm not banking on that. That's for sure. So that is kind of how things are. And if I go back to the spreadsheet so I can answer the question, because I see a question from Shane Stacker of, so buying for 89 cents is a good deal. Yes. I mean, let me even put this up here for, if I go to change this to 89 cents. Sorry, and they're all going to update because they're all based off of that. If you purchased at 89 cents tomorrow and held until December 31st, and then you get paid out your $1 there, that would have an annualized return of, a tad over 31%. So that's pretty good, in my opinion. So hopefully that answers your question. And Transient Stacker also says, I sold most of my shares for 95 cents, but I bought some back on Friday when it dropped. Yeah, I mean, I think seems like a great trade if you did that. So, congratulations. And yes, I do think, what you can expect from the stock is, firms are going to trade this. Let me go to, I guess I can't, I'll just do 5 days, so you can just see this is going to be very likely very flat. I would expect it to hover right around this 94, 95 cent range and just slowly sort of creep up over time. It's going to trade similar to, I mean, in theory, if you take away the risks, like if we forget about the risks of, the risks that the deal won't go through. If you say, hey, you know what, I really think it's very likely, this is going to trade like what you'd call a zero coupon bond, right? Like a bond that does not pay out any interest, but is going to give you back your principal at the end, at the maturity date. And so that's kind of how this would trade. And so those would trade pretty flat and just sort of slowly go up towards the actual, the final par value, the $1 per share, on December 31st. And again, there's also some speculation because we don't know exactly when the deal will close. There are some dates, if you go in here, where they talk about, December. So they're trying to do this by December 15th, but then they also say, well, either party, something about either party might be able to extend it until December 31st. I would just look at it, simplify, and say, you know what, it's probably going to happen, by the end of the year. So if you want to do your calculations, just assume it's December 31st. But again, it could close earlier. And again, if it closed, because if it closed hypothetically in the middle of August, in another couple of weeks, you would go from your 92 cents or your 89 cents, whatever you buy it at, to your $1 in a much shorter time period. So your annualized return on your money would be much higher. Again, it's they expect it to close in Q4. I'll take them at face value on that this is probably going to happen in Q4. So, but it is one unknown, right? We don't exactly know when it will close, assuming that it does close. So there's that. And again, there are these other risks that people have. And so you may or you may not have some, variation up or down as various folks want to take a position to think, hey, this is less likely to happen. And maybe they're shorting it. Or maybe think it's even more likely to happen. Maybe think it's actually guaranteed. Because if somebody thinks this is very, very, very likely, like they say, hey, in my opinion, I do not think there's any this is not me saying this is hypothetical. If someone was saying they don't think there's any any significant regulatory risk, and they, for whatever reason, let's say they're pretty sure they know how Vanguard and BlackRock and Martin and enough shareholders are going to vote to actually pass this thing. Maybe they've actually talked to Chatterjee, and Chatterjee says, yeah, we're going to vote for it because we want our $1 per share. They think that's very likely. They think the risk is low. If they can go buy these 92 cents tomorrow, 21.7% annualized return, right? I think most, hedge fund managers are going to take that every day of the week, right? I think that's a very likely market beating return. I mean, you don't know, maybe the market is going to skyrocket between now and the end of the year, but, this does not have all the same risks because, in general, the market could tank, but as long as Woodside still has their cash and there is still commits to buying Tellurian and Tellurian shareholders approve it, they're going to get this money. This is sort of what happened, if I probably can't pull the chart up anymore, but if you remember what happened with Twitter a couple of years ago when Elon Musk acquired that, he put in the offer and then tech stocks just tanked and tanked and tanked. And there was a lot of controversy, because it seemed like he was trying to get out of the deal. I'm not going to speculate on all of that, but, the value of Twitter had that acquisition not gone through, probably would have gotten cut in half, maybe even down, by 60, 70, 80%, as a lot of other stocks did, because I think we can look at, just real quick, I know this is a bit of a tangent, but if you look at like Snapchat, which is comparable, and let's see, when was Twitter acquired? And so Twitter was acquired, okay, so it says October of 2022. And so if we go back and we look at this chart, just again, real quick, sorry, just bear with me. You look at this 5-year chart, it was acquired in October. And I think let's see when the offer went in. Maybe, well, kind of can't see because there's a massive run up in Snapchat, and maybe Snapchat's not the best comparable. But the point I was trying to make is tech stocks during the time when the offer went in. Let's just check. So when, I didn't mean for that to happen. Lost my tab there. When was the Twitter offer introduced? He made the offer in April of 2022. Okay, so if we look at just real quick, April of 2022 is right here. Hopefully you can see that. And by October, Snapchat, which I think is a decent comparable, had dropped from $28 to $10. And again, Snapchat maybe isn't the best comparable. We could even look at another one. But the point is, the entire NASDAQ, maybe I could just do that, check the NASDAQ composite, which is generally tech stocks. Look over that time period, even the broad index. Sorry, it's going a little slow. Come on, ads. Don't do that. Don't. All right, 5-year chart. 5-year chart. So between April 313 to October 277. So that's in the broad index. It's not very dramatic because I think Twitter and a couple other unprofitable companies were really hit much harder than the overall index. But even the index itself dropped down by, 10 to 20%. And, many of the peers of Twitter really dropped by 50% or more. And so, again, sorry, the point that I'm trying to make here is the returns that you get by buying Tellurian stock now and wait until the acquisition are totally separate from the overall market, the overall macro, the macroeconomic picture, I mean. And so that is, again, attractive for many money managers. Sorry, let me get to the chat and answer some of your questions. See, there's a little bit more. So will this give Woodside a big upside if they complete Driftwood? In my opinion, yes. Again, as always, in my opinion, yes, because, I have shared my models in the past as to why I think the value of Driftwood, once they lined up the financing and had some purchase agreements in place, which, again, they didn't have all those things at the moment, but once they got those, the value would be higher. And as you add in, phase, 2, phase 3, phase 4, the whole facility, the long-term value was going to be massive, right? And so I do think this is a good acquisition by Woodside. I think they got a great deal. Again, on the other hand, Tellurian has not been able to capitalize on that. They haven't been able to actually get it over the finish line. So it's hard to make a really strong argument that, $1 per share is like what do I want to say, a negligent price or a criminally unfair price. It's less than I would have wanted, for sure. It's less than I think is less than I think is a fair price for the Driftwood facility. But yeah, it's I've accepted it that I don't really get a choice in the matter. And Transient Stacker also says, maybe you can do a video about Woodside next. I moved most of my shares to Next, but I'm thinking of putting some into Woodside as well. I will look into Woodside, because you're not the first person who's, asked me about that and who's kind of said, hey, if Woodside is going to have all that upside, maybe I should invest in Woodside. And if you just look at it real quick, sorry, my mouse is still getting used to this laptop mouse here. So if you go to Yahoo Finance real quick, let's look at Woodside. By the way, the ticker for Woodside is WDS, if you want to go look at Woodside. Right off the bat, you can see they're a $33 billion company. So there is a big difference between, what is the relative upside for Tellurian, which was, over time, let's just call it a $2 billion company for most of its lifetime, $1 to $2 billion, somewhere in that vicinity. The upside for a $2 billion company on whatever their ownership of Driftwood would have been versus the upside on a $33 billion company, there's a massive difference. Tellurian could have grown to long-term, I mean, I don't have the numbers off the top of my head here, but at least, I would have said they probably could have gotten to, let's say a $30 billion company. There's possibilities in which it could have grown even more, but, let's just peg it, 10, 20, $30 billion, whatever. $20 billion, let's call it, would have been a 10x from where they were. $30 billion would have been, what's that, a 15x. So the upside for Woodside, let's say they're capture all that the same amount of value that we thought Tellurian could have gotten. Let's call it just $30 billion. Again, these are order of magnitude numbers. I don't have a model backing this right off the top of my head, but let's say order of magnitude, the long-term Driftwood could have been, $30 billion. And if Woodside somehow, builds a facility and captures most of the upside themselves in terms of, that's their equity value that accrues to their stock, that's a double for Woodside. And that's a decade-long time frame probably to get Driftwood all the way up and running, the full facility. Again, I could be wrong on that, but I'm just trying to put it in perspective here to say the reason why Tellurian was such a unique opportunity was because the relative value of what they could get out of the Driftwood facility versus where they were at was massive. For Woodside, and let's go even more, hypothetical. Let's say, I don't know, ExxonMobil had acquired Tellurian. They're a couple $100 billion company, right? And so buying Driftwood out for, let's just round it off to $1 billion and saying eventually they can develop that and make it worth $30 billion. Sure, they captured $29 billion of upside, but if you're already worth $200 billion, $300 billion, that's a 10% bump. That's nice, but it's going to take you at least 5 years, 10 years to get to that point. And so it's just not, it helps, but it's not a massive, massive return, right? So that was always the interesting, unique opportunity that Tellurian kind of provided. Those are my thoughts on it, but I am happy to look into Woodside more. It's just, it's a different, it's not a startup, right? Tellurian was a startup. Woodside is not. So that's a bit of a difference, just to level set expectations for folks. But I mean, it may be that Woodside still is a good is a good company. I have not, as I mentioned very early on in the video, I have not done any real deep diving into them, but I will add it to my list. Up North Uper asks, what is Woodside going to do with it? Who knows? I assume they're going to try to develop it and sell. Martin does touch on this a little bit in his letter where he really says Woodside already has 10 million tons per year of, equity LNG in Australia, and they want to grow that globally. So, I mean, I assume they're going to develop Driftwood. I assume they're going to get customers for their LNG. They're going to start producing it in the United States. It's going to be a second facility that they have where they can ship it from either Australia or from their Driftwood facility in the United States, and that they have that sort of, diversity of where they have things. So if there happen to be, regulatory issues or whatever, they have their foot in both in two different places. They can, as I said, ship from various places. So, if they get customers, depending on where the customer's at, maybe it's better for them to ship from one place or the other. And so my assumption is that they are going to develop this and they're going to build Driftwood as we always thought it was going to be, just it's going to be owned by Woodside rather than Tellurian. But again, I don't really know. I have to imagine they're going to do that. I mean, it's not like they're getting it for a trivial amount of money. $900 million or $1.2 billion really, when you really put the full enterprise value for Tellurian out there, that's not chump change, especially for a $30 billion company. I guess I didn't double check. I don't remember what their balance sheet looks like. Let's just take a look here. Balance sheet. Go to quarterly so we can see the most recent balance sheet. Most recently reported balance sheet. I guess it's only as of the end of the year here. In terms of cash, they had $1.9 billion in cash. So I mean, it looks like they could pay for that out of cash if they wanted to. Although they have current liabilities to offset most of their current assets. So it's hard to say that they could just let $1 billion go straight out the door and not have any real cash flow issues. But again, I assume they're going to develop it. And Transient Stacker says, well, Woodside pays a dividend, so at least you get something while you wait. Yeah, I mean, it's a good point. They pay, in fact, a 7.9% dividend as of close of Friday. So definitely a different ballpark. So I haven't done my research into Woodside, so I'm not even going to make a recommendation, or not even going to. I don't generally make recommendations at all, but I'm not even going to speculate on what the returns might be for that, other than to say, yes, it certainly looks interesting. And I personally think they got a great deal on Driftwood. I think that's going to be a long-term, winner for them, assuming that they can line up, customers. I mean, if they've already got 10 million tons per year, presumably they've got some of that already going for them, and they know how to do that too. So probably going to be successful with Driftwood. That's kind of my thoughts on it. I think that's basically everything I wanted to talk through. I think I wanted to go over kind of precisely mechanically what is happening if you still hold Tellurian stock, why it might still be a decent thing to hold or to get. Oh, one other thing, just if you're curious, they did also, this is a thing that they showed in here, they got the management to actually agree to lower payouts, because when there's a change of control, a lot of things that were prior management bonus targets, they get paid out, right? If you ever read through employment agreements, or you read through some of the fine print in the annual reports, you'll see some provisions for like change of control. And a lot of these executives will have it say like, hey, if there's a change of control, then I'm going to get paid out a whole bunch of money because they're probably going to fire me or whatever. So they put these into their employment agreements. And one of those, if I understand it correctly, was all of these cash incentive payments that they had. I think that's what they're called. And these were payments that the executives were going to get when they got their FID, their final investment decision made on phase 1, phase 2, phase 3, and phase 4. So they set these up, and you can see Daniel Bellheimer. I'm going to guess that's how you pronounce it. Sorry, I'm not quite sure. As the president of Tellurian, he was going to get, $6 million when they FID'd phase 1 and $3 million for each future phase, for a total of $15 million if they could actually get the full facility, just FID. That's not even built and operating. If they just get everything lined up and get the FIDs positive, he was going to get up to $15 million for the full facility, which would have been, I would have, as a shareholder, been happy for him to get that money, if that meant we had decent terms for Driftwood and it was all getting built. But that being said, they got the management here to agree to much lower payouts as part of this. They say on July 18th and July 19th, the company's named executive officers agreed to these amendments, basically just dropped those amounts down. So he went from $15 million to $4.5. Samik, because he's the president, I think it was the COO before that, went from $12 million down to 3.6. And, some of the others dropped similarly. It's still a ton of money for these guys. I think it's probably, if I recall correctly, it's on the order of, 5 or so years worth of compensation. They're just getting paid out in a lump sum here when the actual acquisition goes through, that's a change of control, and so these are just going to get paid out. But that's what's going to happen. But it was just a curiosity to say, hey, they are actually getting slightly less money than they would have otherwise. I bet that was a condition for Woodside. They said, hey, that's probably pretty high of a payout for these guys. Get them to accept less, or else we're not going to do this. But again, that's speculation on my part. But that's just one thing that I wanted to call. That kind of makes me think they've got everybody on board, that folks are going to vote for this agreement, right? If they got folks to agree to these amendments, that means that they're on board. They're voting, whatever shares they're holding, they're probably going to vote in favor of this acquisition. And yeah, so I think it's likely to happen. And these guys are, fairly well taken care of from where they're at. So, all right, any other questions or comments? If not, I am probably going to hop off here. I think that was everything I wanted to cover. Personally, I guess that's the last thing I could end with here, because I've had people ask me what's going on, but then they also ask, what are you doing? And again, I don't give financial advice, so I'm not trying to tell you what to do. This is just what I am personally doing. This is somebody who's been holding Tellurian stock for a while. And, at the current moment, as always in the stock market, you have to just accept what's right in front of you. The past is the past. So you don't get a second chance on that. You only have what's in front of you now. And so I'm still holding on to my shares. What I'm doing generally is I'm viewing it as, sort of a low risk, low return, or medium return, let's even say. If we looked at these numbers back here, it's mostly been trading around 94 cents per share. So let's look at that way. And so between now and at the end of the year, it's a 15% annualized return. Cash on cash is probably more like an 8% return, 7% return, something like that. But, even holding at 94 cents per share, you are getting a return more than likely, because again, by the end of the year, worst case scenario, you'll just get that $1 paid out to you, assuming the deal goes through. And so I personally, as I mentioned, think that the deal is likely to go through on the time frame that they mentioned. And so I'm viewing this kind of like a better money market fund than my cash is in a money market fund. I've just been holding on my shares, and if and when something else that I want to buy, drops, let's say, I have a number of other stocks I'm looking. I'm not going to disclose them right at the moment, but if something else drops by 10 or 20% and it gets down to a price where I really want to actually go heavier into that stock, I'm going to sell off my Tellurian shares, probably most of them or all of them, all in one fell swoop, and then use it to purchase whatever I want to purchase. So to me, it's kind of like a better money market right at the moment. That's just how I'm treating it. So that is what I'm personally doing with my shares. And so I'm holding them at the moment, but I will get out of them at a moment's notice, not because of Tellurian, but because if something else that I want to buy actually drops. I have, when I actually did the math on it now, and I put together a spreadsheet and I saw that drop on Friday, I was, I did consider maybe if we see more drops. Let me go back to, where's the Tellurian? Oh, I didn't have it on here. But, if we saw more drops down 90 cents or below, I may actually buy some shares. And again, like I said, this is what fund managers will do. They will buy into these acquisition targets, especially, if there's some drop for seemingly no reason. They'll buy those and hold it. And they call it, I think the term is, merger arbitrage, or acquisition arbitrage, I guess, is what you'd call it, where they're just, buying in and waiting for the payout. And, it's not a bad strategy. It's kind of again, not guaranteed payout, but it's the risk for this, as I mentioned, are different than the overall market and macroeconomic risks. So Transient Stacker says, sad ending for Tellurian. Yeah, it is a very sad ending. Personally, I'm disappointed. As I mentioned, or I titled the video, it's the ride of a lifetime. It's coming to an end, but it's not really coming to an end. It's kind of like it, I don't know, broke down, right? And it's not quite, broke down is not really the best analogy, because it's not like they went bankrupt, but kind of just ran out of momentum is maybe a better way to frame it. But so yes, and yes, tons of people lost thousands. They did. I am one of those. I won't disclose how much, but I purchased my initial shares in 2018. So if you zoom out here, 2018. Well, this is way before they even were Tellurian, but in 2018, I was buying somewhere around, here, $7, $8. Not all of my shares are from there. I bought more shares when it would drop down into the I've bought shares at various points, so I don't really want to disclose all of it, but I am still holding probably half of my shares that I purchased in 2018. So I lost a good chunk of money on those. I'm not very happy about it. Um, Granted, there was, $8 seems like a ridiculous price nowadays, but there was a lot less shares outstanding at the time. So it's sort of on a company valuation, it's a bit of a wash. But yes, lots of people lost a lot of money, and we're never going to be able to, even have a chance at that, massive upside that I think the Driftwood facility would have still brought. Anyways, Regons asks short Woodside. I don't know that I would short Woodside, right? I mean, they actually seem. Sorry, I'm not gonna say anything one way or the other. I think they got a good deal on Driftwood, so I mean that's at least a good thing going for them. I haven't done any research, so I'm not even gonna speculate on that. But I mean, just looking at it, it doesn't jump out as me as a short. Transient Stacker says at one point I was up $200,000. I learned a lot about profit taking, being greedy. You and me both, I mean, sorry, I was never up $200,000. I'm not going to say that, but yes, there were bits about profit taking, and there were times, when I thought it was overpriced. There were times when I thought it was underpriced too, and I didn't, double down. But it's hard, right? Because day to day, it's just really hard when you're looking at that stock price and you see, hey, it's going up. It seems like it's gonna stay there or continue going up. And when it's going down, you just think, man, it's it's hindsight is really easy to make decisions, but in the moment, it's really hard to look at things and call the tops or call the bottoms, right? So it is what it is. I've accepted a long time ago. And that's why, just to call it out there, like I am not a short-term trader. I don't even, in general, I don't attempt to be. There have been a couple instances I've tried to do short-term trades, but I usually limit those to small portions of my overall portfolio. My general philosophy is I'm going to form a thesis on something. I'm going to buy it and I'm going to hold it for years and years and years. I mean, Tellurian was one of the prime examples. As I said, I still got shares I was holding from 2018, and the thesis really was Driftwood, and it never went away. There were reasons sometimes when the stock went up, stock went down, and I think a lot of times it was to some degree deserved, sometimes not entirely deserved, but personally I am trying to invest for the long term, and that's how I treat it. So yeah. R. Gilbert says, I've known about profit taking, dollar cost averaging, yet still don't do it. Yeah, dollar cost averaging is a little bit easier to do. Profit taking is a hard thing, right? When you still think there's a lot of upside, which I think that's what most folks who were in Tellurian still viewed it as a startup and still viewed it as, hey, if they get this thing going, there's still a lot of upside left, even at their peak, right? We still had models that were, in my opinion, I had models that I think were pretty credible to show once the FID, this thing should, go up by a fair bit. By the time they get even to operations, it should go up even more. And that was always the case. That's why I really think, that's why I was still invested, a week ago when they announced this acquisition, that there is still upside if they can make Driftwood happen. Ree says, dude, 200K, it's a lot of money, or a ton of money. Yes, it is. Trinity Stacker says, I should have sold half at least and moved to a safer stock, but I was thinking I was going to make $1 million. Well, that's exactly it. And that's another thing. That's a whole separate conversation of position sizing, right? I have some shares that I held, since 2018, and I've been, as I mentioned, I've added more a bit over time. But for me, I never put 100% of my money in Tellurian, not even close to 100%. So it's all about position sizing. I was comfortable with the share count that I had, for quite a while, even as those shares went down, from, as I said, like $7-8 per share to, I don't know, 50 cents during the pandemic, and then came back up. It's like I sized my position accordingly. I wasn't happy about losing the money, but I knew that it was limited to what I put in there. It was a certain portion of my position or of my overall portfolio. And I think it's a very important conversation, a very important lesson that people, you kind of just have to learn for yourself, because everybody has a bit of a different strategy on how do you size your positions. A lot of that honestly comes down to conviction, right? Because I think if there's something that somebody was so convicted in, they were almost sure it was going to be a winner. Let's say somebody, because I think there were folks who really did even more research than me on Tellurian. People, especially people who were local in the area, knew other folks maybe in the industry. They really thought Driftwood was going to happen. They really thought, even back in 2022, when they had some sales and purchase agreements, some people I think went really, really heavy into Tellurian because they just had massive conviction. And I think position sizing, really has to come from how both what is the upside, of course, but then also what is your conviction in that particular stock, and having a full understanding of the risks, right? So that's definitely. But as you say, selling half and moving it somewhere else, that's a pretty good strategy that lots of people have employed. If you're in something and it doubles, they say sell half your position, let the rest of it ride, but then at least you got your initial money back from it, and you can know that you're not losing money, and the rest of it's basically just house money that you're playing with. And again, you didn't necessarily say that your stock doubled, from your entry price, but it is certainly different people have their own philosophies. Again, like I say, mine is I do it through position sizing, and that's basically it. I'm willing to hold, and I'm willing to lose whatever money I put into each position that I have. I don't necessarily keep adding more and more and more to something, but I lots of times I'm willing to put in the money and then let it ride and see what happens. And that's kind of just my personal philosophy. But I think other people have lots of other ideas. R. Gilbert says, I have a coworker who lost north of $100,000. I feel bad, but we move on. Yep, that's exactly it. And Transient Sacker says, I made a good play with stock options when it went to $6. Well, good for you. That is my one regret, I would say. I think this whole time, if I had been, selling some even conservative covered calls, I probably would have gotten all of my money back out of Tellurian, and then some. But that's a lesson learned, and I have actually applied that. There's been other stocks that I'm holding right now that I've been selling some, conservative covered calls on, because it's hard not to turn down the cash flow. And that's something that I personally have started doing more heavily in the past year or so, and it has been helpful and would have been helpful for Tellurian. There's loads of times. Yeah, my worry for Tellurian, and I do have a couple stocks where I'm more conservative on the covered call side, is if you have something where overnight there could be some agreement that doubles the stock, it's really, really hard to sell covered calls on that, because legitimately your stock could be called away when you don't want it to. So I'm not necessarily going to say that I should have been doing that. It's frustrating that so much time passed and they never had that massive agreement that finally we got our FID, and it's just gonna explode up to what I think the fair value really could have gotten to. But all right, James Sacker says, yeah, he said he made a good play with stock options when it went 6, but then I wrote it all the way down. I exercised the options. Yeah. Yeah. All right, that's a lot of rambling from me. So hopefully you guys enjoyed that. I don't know if there's any other questions or comments. I'll give it just a minute on the chat. Sorry I haven't been able to do as many streams as normal. I got a family, and summer tends to be a pretty busy and crazy time. We also tend to visit extended family out of state, so I'm just not as available. I apologize for that. I'm going to try to get back to it, especially as the kids get, back into school in a month or so. I'm going to try to. Let me know in the comments, or you can always email me or reach me on X or Twitter. Whatever you're interested in, you can DM me. My DMs are open there. Yeah, just let me know if there's something you'd be interested in. I will look at Woodside. I know that was a suggestion. Yeah, and Tracy Sacker says, better luck with Next Decade, I guess. Yeah. I think Next Decade has been a winner. I was also investing in Next Decade back in those times, and I've added more. I'm definitely up on my position there. I think there's still, I've put forth my models in the past. I think there's definitely still upside in Next Decade stock at these levels still, as they develop phase, trains 4 and 5. But that'll take some time, but I think it's very likely to happen. So, yeah. that's another one I do want to add a little bit to my position. I'd like to buy under $7, ideally around $6 if I could by this point, and it's trading somewhere around $8. But that's and not financial advice. That's just what I'm hoping for. I've already got a decent position there. But anyways, I am going to hop off now. I really appreciate everybody watching. Thank you very much and have a good one.